Real estate or stock market? I used to be obsessed over this question for years. What's up, Roof Money Pros? Mike here with Roof Money Pro. And if you've ever gone down that rabbit hole trying to figure out where to put your money, real estate, stocks, crypto, whatever, you know how overwhelming it gets. Forums, podcasts, Twitter debates, YouTube videos screaming at you that one way is the only way. Everyone has the answer, and most of them are wrong because they treat it like an either-or decision. Like you, I had to pick a team and fight for it. Here's what I learned after years of overthinking this. I didn't choose sides, I chose outcomes. And today, I'm breaking down exactly how I approach the real estate versus stock market debate, the expensive mistakes I almost made and have made, and why choosing both was the most practical, wealth-building decision for my situation. My mission here is to help roofing professionals like you maximize your careers and build wealth. And that means cutting through the noise and getting real about what actually works. So if you want financial clarity instead of confusion, hit that subscribe button right now because we're diving deep. Now, this isn't about me telling you what to do with your money. This is about showing you how I thought through the decision so you can make the right call for your situation. Because wealth isn't built by being right in some online argument. It's built by making decisions that still work when things don't go perfectly. Now let's start with why this debate gets so heated in the first place. Because understanding why people fight about this will help you avoid getting sucked into bad advice. Online advice pushes extreme positions because that's what gets attention. Nobody clicks on a video titled "Real estate and stocks are both fine depending on your situation." They click on "Why real estate will make you rich and stocks are a scam," or "Stock market investing destroys real estate every time," or "Why you shouldn't start your own roofing company." Shameless plug for my other videos, so go check it out. Seriously though, extreme positions get views, nuance doesn't. So influencers pick a side and defend it to the death even when they know it's not the full story. Emotional investing versus strategic investing is the real split here. Some people fall in love with real estate because it's tangible. Look, I totally get it. You can touch it, drive by it, show it off. Other people love stocks because they're simple and passive. No tenants calling at midnight, no roofs leaking. Both groups get emotionally attached to their choice and then they defend it like their identity depends on it. Now, how identity gets tied to asset classes is wild when you think about it. People start calling themselves real estate investors or index fund investors like it's their personality. And once your identity is wrapped up in a decision, you stop being objective. You defend your choice even when evidence suggests you should pivot. The danger of copying someone else's path is huge. Just because your uncle got rich flipping houses doesn't mean real estate is right for you. Just because some finance guru preaches index funds doesn't mean that's your path. Their situation isn't your situation. Their risk tolerance isn't yours. Their time and skills aren't yours. Why context matters more than returns is the key lesson here. Real estate might produce better returns on paper, but if you hate dealing with tenants and don't have time to manage properties, those returns don't matter because you'll quit and burn out. Stocks might be safer statistically, but if you panic sell during a downturn because you can't handle volatility, that safety is meaningless. Now let's break down real estate first because this is where most roofing sales reps start dreaming about real wealth. And look, real estate can absolutely work, but you need to understand what you're actually signing up for. Cash flow, leverage, and tax advantages are the big selling points. You put 20% down on a rental property, tenants pay your mortgage, you get monthly cash flow. You use leverage to control a bigger asset than you could buy outright, and you get tax deductions on depreciation, interest, and expenses. On paper, it's beautiful. Forced depreciation and inflation protection are other benefits. You can improve a property to increase its value. And over time, real estate tends to keep pace with or beat inflation. Your asset grows while your mortgage payment stays fixed. That's powerful. But here's what they don't tell you. Time, management, and operational headaches are real. Tenants trash the place. Appliances break at the worst times. You're dealing with evictions, repairs, and property managers who don't care as much as you do. It's not passive income. It's a part-time job unless you're paying someone to manage it, which eats into your cash flow. Capital requirements and risk concentration are serious considerations. You need serious money to get into real estate. Down payment, closing costs, reserves for repairs, and when you put $50,000 or $100,000 into one property, you're concentrated. If that market tanks or the tenant stops paying, you're exposed. Why real estate feels safer than it really is comes down to psychology. Because you can see it and touch it, your brain thinks it's less risky. But real estate markets crash too, and I'm not talking about widespread catastrophes like 2008. It could be the one section of the city you chose to purchase in that experiences a slump based on local factors. Properties lose value. Tenants stop paying. You get stuck with a money pit you can't sell. The tangibility creates a false sense of security. Now let's talk about stocks because this is the other side of the coin. And again, stocks can be an incredible wealth builder, but they're not perfect either. Liquidity and simplicity are the biggest advantages. You can buy stocks with a few clicks. You can sell them just as fast if you need cash. You can change asset classes and geographic markets in an instant, like going from healthcare to biotech. There are no tenants, no maintenance, no phone calls at 2 in the morning. You set up automatic contributions and let compound interest do its thing. Long-term compounding power is where stocks really shine. Over decades, the stock market has consistently returned around 10% annually on average. That's not guaranteed year to year, but over the long haul, it's historically been one of the best wealth building tools available to practically everyone. But emotional volatility and market swings mess people up. When the market drops 20 or 30% in a few months, such as the tariffs of early 2025, people panic. They react and sell at the bottom. They check their accounts obsessively. The mental game of stocks is harder than people admit. Lack of control compared to real assets is another downside. You can't force appreciation in a stock. You can't renovate Microsoft to make it worth more. You're along for the ride. For some people, that's freeing. For others, it's frustrating. Why consistency beats timing is the lesson most people learn the hard way. You can't predict market bottoms and tops. The people who win with stocks are the ones who keep investing through the ups and downs without trying to be clever. Boring consistency beats exciting timing every single time. Now here's where most people screw up when they're deciding between real estate and stocks. And I almost made these mistakes myself. Chasing returns instead of building systems is mistake number one. People look at the best possible outcome for real estate or stocks and assume that's what they'll get. They hear someone made 50% in a year flipping houses, so they think they will too. They hear about a stock that went up 300%, so they think they'll catch the next one. But returns are meaningless if you don't have a system to execute consistently year after year. Ignoring cash flow stability is huge. Some people dump everything into real estate without considering that their rental income might not be reliable. Vacancies happen, repairs happen. Meanwhile, they have no liquid assets if something goes wrong. Same with stocks. People invest everything in the market and then freak out when they need cash during a downturn and have to sell at a loss because they didn't build a reserve. Over-leveraging into real estate too early kills people. They max out their credit to buy rentals before they have a solid financial foundation. One bad tenant or one big repair and they're underwater with no safety net. Leverage amplifies gains, but it also amplifies losses. Underestimating behavioral risk in markets is the flip side. People think they can handle volatility until they actually experience it. When their portfolio drops 30%, the theoretical becomes real, and they make emotional decisions that destroy their wealth. Confusing best with best for me is the root of all these mistakes. Just because real estate has higher potential returns doesn't mean it's the best for you if you hate managing properties. Just because stocks are simpler doesn't mean they're the best for you if you need cash flow now. The best investment is the one you'll actually stick with through the hard times. All right, so here's what I actually did. And this is where I stop talking in theory and get specific about my own money. I started with real estate. After my first year in roofing sales, I bought a fourplex. That was my entry into real estate investing. I experienced just about every worst case scenario I mentioned in this video. Within 3 months after purchasing, I was faced with a full vacancy bringing in zero cash flow. The property manager I started with seemed to give me the runaround every single month and passing everything off as if it was the slow season in that area. Unfortunately, I didn't fire them soon enough, and eventually I found a much better company that kept me in the loop in their efforts to get everything rented out. Needless to say, I bled cash flow that first year. It taught me the business, and it proved to me that these principles are the difference between disaster and prosperity. But I didn't stop there. I made a decision that a lot of people thought was crazy. I decided to pay off my primary home. It had a balance of $175,000 and I paid it off in 16 months using the feast system. People told me I should invest that money instead. They said paying off a mortgage was leaving returns on the table. But here's what they didn't understand. I wanted the peace of mind. I wanted the security of owning my home outright. It didn't matter what kind of month I had in roofing sales because I would be resting my head in a house that was fully paid for. And that decision lined up with my long-term real estate plan. My current real estate plan is to own 3 to 5 rental properties. My paid off home will eventually become a rental property after I purchase the next home, which I'm actively working towards right now. I'm not all in on real estate. I'm strategically building a small portfolio that gives me cash flow without overwhelming me with management responsibilities. At the same time, I'm building my dividend portfolio. I'm shooting for $100,000 in assets as my first major milestone. That's going to provide passive income that complements the rental income. And the beautiful thing? These assets work together. Using stock market investing for simplicity and consistency was the right call for part of my wealth. I don't have to manage stocks. I don't have to deal with tenants. I just invest regularly and let time do the work. Using real estate for leverage and cash flow filled a different need. Real estate gave me the ability to use other people's money to build equity, and it gave me monthly income that I could see and count on in a different way than stock dividends. Matching investments to income volatility was critical. As someone with variable income from roofing sales, and now from running Roof Money Pro, I needed flexibility. Stocks give me liquidity if I need it. Real estate gives me forced savings and wealth building that I can't easily touch. Why diversification across asset types matters is simple. When one is down, the other might be up. When real estate markets are soft, stock markets might be strong. When stocks are crashing, real estate cash flow keeps coming in. I'm not dependent on one thing going right. How each asset plays a different role is the key insight. Stocks are my autopilot wealth builder. Real estate is my cash flow and leverage machine. They're not competing, they're complementing. And here's something that doesn't get talked about enough. Variable income changes everything about how you invest. And I recognized all of these factors when I was in roofing sales. And honestly, they still apply to me now as a business owner running Roof Money Pro. Commission income requires flexibility. When you don't know what you're making next month, you can't lock up all your money in the liquid investments. You need some money you can access quickly without penalties or waiting periods. Liquidity needs versus long-term growth is a constant balancing act. I needed some investments I could tap if I had a terrible month or quarter, but I also needed long-term investments that would compound over decades. So I split the difference. Some in stocks for liquidity, some in real estate for long-term wealth. Using good months to invest intentionally was my strategy. When I had a big commission month, I didn't blow the money. I allocated it. A majority went to paying down my house and then eventually into reserves and stocks. Good months funded my future instead of my lifestyle inflation. Avoiding all-in bets with uneven income was non-negotiable. I couldn't afford to put everything into real estate and then get stuck with no liquid cash during a slow season. And I couldn't put everything in stocks and then panic sell during a downturn because I needed cash flow. Diversification was about survival, not optimization. Building resilience instead of maximizing returns became my philosophy. I stopped chasing the absolute highest return and started building a wealth system that could survive anything. Bad months, market crashes, real estate downturns, whatever. My goal was to build something that couldn't be knocked down easily. And honestly, this is exactly why I created the feast system. Because managing money with variable income is completely different than managing a salary. And coming from a former licensed financial advisor, nobody teaches you this stuff. Feast walks you through exactly how to handle uneven income, how to allocate money during good months, how to survive bad months, so that you can invest strategically without overexposing yourself. Now, if you're dealing with variable income and you want a proven framework that actually works in real life, hit the link in the description and check out Feast today. This system changed everything for me, and it's the same framework I use with my personal clients. Now, let me bring this all together because this is where the magic happens. Real estate and stocks aren't competitors, they're teammates. Stocks provide liquidity and automation. When you need cash, you can sell stocks quickly. When you want to invest, you can set up automatic contributions and never think about it. That's powerful. Real estate provides cash flow and control. My rental properties generate monthly income whether the stock market is up or down. And if I want to increase the value, I can renovate or improve management. I have some control. Risk reduction through diversification isn't just theory, it's real. When real estate markets were soft in certain years, my stock portfolio kept growing. When stock markets crashed, my rental income kept hitting my account. I wasn't dependent on one thing working perfectly. Balancing effort-based and passive investing keeps me engaged without burning out. Real estate requires some effort. That keeps me sharp and involved. Stocks are passive. That keeps me sane and prevents burnout. Building wealth without overexposure gives me peace of mind. I'm not betting the farm on one asset class. If real estate tanks, I'm okay. If stocks crash, I'm okay. That security is worth more than squeezing out an extra percentage point of returns by going all in on one thing. The real estate versus stock market debate isn't about picking a winner. It's about building a strategy that survives real life. I didn't choose sides. I chose balance. Stocks gave me consistency, simplicity, and liquidity. Real estate gave me leverage, cash flow, and control. Together, they gave me options. and options are what create real financial freedom. Wealth isn't built by being right in some internet argument about which asset class is superior. It's built by making decisions that still work when things don't go perfectly. When markets crash, when tenants leave, when income drops, when life throws curveballs. Your situation is different than mine. Your risk tolerance is different. Your skills are different. Your goals are different. So don't copy my path exactly, but use my thinking process. Ask yourself what you actually need from your investments. Ask yourself what you can realistically manage. Ask yourself what gives you peace of mind versus what keeps you up at night. And then build a wealth strategy that fits your life instead of forcing your life to fit someone else's strategy. These obstacles and solutions, I faced every single one of them during my years in roofing sales. That's how I figured out what actually works. And now I get to help clients avoid the same mistakes and build wealth faster than I did. That's exactly why I created my financial coaching program specifically for roofing sales reps like you. I'll help you get crystal clear on your financial goals, build an actionable plan that actually works with commission-based income, and implement systems so you're never caught off guard again. If you're tired of the stress and ready to take control of your finances, the link is in the description below to schedule a quick discovery call. And hey, if this topic resonated with you and you're ready to stop riding the commission roller coaster, hit that subscribe button because we'll go even deeper into specific wealth building strategies for roofing professionals. I'll see you in the next video.